Hey everybody, welcome back. Well, we have to talk about the S&P, its reaction to the data today, ADP, non-farm payrolls, and then also the services PMI. Very different reactions. We have to talk about why Google went up after hours only to come back down. This is pretty interesting news, and we definitely have to focus on what this means. Smart money, dumb money definitely needs to be covered. What happened at Disney? Why the massive reversal? There's a lot to go over here. Nvidia's and its inability to rally. This might be explained by what's actually happening at Google. We're going to have to talk about that in detail and why we're seeing these names like uranium and why we're seeing VLO and these kinds of names just absolutely explode. I'm going to walk through one technique that you'll find very, very helpful. I found it extremely helpful recently in trading, and I would suggest that you utilize it as well. But let's just jump right into it. So we're going to start with the S&P 500, and I want to start with what happened today, exactly what happened with the moves. We're just going to go to the bear chart to start, and then we're just going to drill right into this area. So what happened here at 8:15? As we all know, if you're new, what we tend to do is you mark off that first 5 minutes or first 1 minute you want to mark off. And the reason you mark that off is because you want to see where the algos are at. All the high frequency traders, they all have their levels set dependent upon the data. Now, people usually say, no, that's not possible. And then they mark them off for a couple times and go, huh? And they actually say that. They actually go, huh? But if you could see that area right here, and you look what happens until what? Until we hit 10 o'clock. I wonder what happened at 10 o'clock. More data. So let's get into this data so you can get a full picture of what the heck is going on out there. Now, before we get started, we have to just talk about what happened already so that we're aware. We went over this earlier in the week and we talked about that you had to watch today's data. But just a quick recap for those that are newer. So you have S&P Global Manufacturing PMI that came out, and then you have ISM. ISM is the one they focus on. This is from Trading Economics, and anybody can go to this website. It's free. I try to use free sites here so that it's easier for people to follow along. Previous was 47.8. We came in at 50. Consensus is 48.4. That's what they were looking for, 48.4. Now, if you know how to use this data, it's relatively simple, and this is going to account for also what came out today. You have a demarcation line. This demarcation line right here is 50. Anything above 50, okay, anything above 50 is expansion, all right? When you get to a level, let's say 55, right, that's where you're gonna have an issue. Let's clean that off and redo it. I don't like the way that looks. And for time's sake, we're not gonna wind up editing it. We're just gonna rock and roll with it. So let's put that back in. 50 from here down, okay, that is expansion. And that's what you wanna remember. So anything above here is expansion. Anything below 50 is not expansion. It is considered contraction, right? So anything down, contraction in this area. So what you usually see for them to cut rates is a period of contraction that's say 45. Now, what made this so dangerous to us was this number was in a period of contraction. And what happened to it? It became into a period of expansion. That's why this was so damaging on Monday, because a lot of people were looking at Monday's data and they couldn't understand it. Now, PMI stands for Purchasing Managers Index. And I want you to think about Purchasing Managers Index exactly as it says. If a manager had to purchase something, okay, what would that cost? Well, you would assign it to the index. And they break it out by manufacturing and they break it out by services. So now you learned something, or maybe you already knew that, you got a nice refresher. So that takes us into why Monday was so pertinent. This takes us into Tuesday. And this is really, again, very important for us to understand. You have JOLTS jobs numbers here, and they were in line, and they gave us no real love there whatsoever. And then you have factory orders. Now, the factory orders previously were negative, and then they went positive. Now, despite the fact that we were even at consensus and they were above consensus, that was more the issue, right? But also you had a negative number here, and then that negative number became a positive. Well, that shows that you're in a position here where you're getting what? You're getting stronger. You're not getting weaker. And that's not what you want to see when you're waiting for this, quote, rate cut, which, quite frankly, they would have been better off just never talking about. And that's going to take you into Wednesday. And that takes you into today. And what happens today? You have some data that comes out, ISM PMI. Now, that PMI came in lower than expected. And then what happened at 10 o'clock from there? The market exploded. Why? Because this showed that it's not spreading. It showed that just manufacturing just upticked. And that's why we moved the way that we did. We'll get to that in a minute. But the real data that you're going to have to watch is coming on Friday. It's this non-farm payrolls. Now remember, ADP came out. ADP non-farm payrolls came out and it was higher. We're not going to spend an inordinate amount of time going through this because we have a lot to cover. But we need to be aware of that. I'm going to focus on smart money, dumb money because this is pretty interesting what's happening. But we need to pay attention to this. And this is pretty significant. Okay, so ADP came in higher, but remember one thing about ADP. ADP uses ADP data. Now, ADP data, the way to think about it is this. They only use their data. Their data is average of 30 below. So their average client, 30 employees or less. BLS uses everybody. So while you're down here for ADP, if you think about it for BLS, you're all the way up here. So that would include all of this and then total it up versus ADP that would stop at 30. Right? That's really important for people to get because they think that ADP is going to show them what BLS is, but they're not aware of the distinction. Okay, and usually it's worse because larger companies tend to lay off. So now you understand why we did what we did at exactly 10 o'clock today and why we moved the way that we did at 10 o'clock today. And now what you're starting to see is you're understanding these levels and why these levels were so pertinent. 9:30 ran right into it, complete rejection. Take a moment and you can do the same exact thing on the NASDAQ. And you will see that level and you'll see how we exploded right at 10 o'clock and did not look back because the number was weak. They were looking for a reason to rally us. You can see that 1 o'clock marked here on the IWM2. Rejection, falls all the way back down. And then we literally gap up on the index itself and just rally, and we literally never look back. So that was some relief because it was not as bad, I guess, as people expected it to be. Now, with that said, we are starting to see a divergence that we talked about yesterday, and I do want to spend a little time on this with Bitcoin so that people are getting this. Bitcoin was going up every time we saw any kind of inflationary pressure. Anytime we saw inflationary pressure, we would see Bitcoin go up. We're not seeing that. Why? Well, we still have the inflationary pressure argument, or do we? Well, then you watch the 10-year today and the 10-year yield dropped. Remember, if yield drops, they're buying bonds. So why are we seeing this rally in gold? Why are we seeing the continued rally in silver, right? Why are we seeing these things continue to push the way that they are? You're seeing it in uranium. We're seeing this pretty much everywhere right now. So I think this is really important for us to get as to why we're seeing this. And for me, I think I have a pretty decent handle on it. But if you take a look at these energy names and oil names, they're all moving to the upside. Take a look at TPL. This is something that we bought a while ago. I think we're up close to, well, this is pre-split, but I think we're up close to 200 points in the trade now. And this is tied, obviously, Texas Pacific Land, tied to drilling and leasing of drilling lands. But what's important about this is where the money's going, and we're gonna talk about this. I think that people need to get this concept because I see people making the same mistakes over and over again. So I want to talk about how to avoid this mistake. I think it's very important, and we're going to get to that. So we want to look at obviously where the money's going, but what are we saying? Are we seeing that inflationary hedge come off? If that's the case, why is the market doing what it's doing? Why are we rallying in energy? Why is crude rallying? Why are all these things continuing to go up? And it's not just one sector. It's very specific. It's gold, it's silver, it's anything asset based. And you're seeing it everywhere, even in the copper names, right? If we go to the copper names, look at copper today. Look at how copper is exploding. FCX, SCCO, right? That's what's moving as we're sitting here talking about some of these other names that people want to talk about. We had banks that were up 10% today. If you look at like BBAR, these names are exploding to the upside, right? And people don't understand why this is happening. And it could be that people are going to say, oh, it's his speech, his Powell's speech. Powell gives a speech every 24 hours. And every 24 hours, someone pulls out a new word. The only speeches that matter are the Fed, after the Fed meetings to me, and then what he says in between. Unless he's going to cut in between, I really don't care. Unless there's like an emergency. It's just nonsense. It's just him regurgitating the same thing over and over and over again. So, but if we start looking at these banks, these are all these Argentinian banks, they're all setting up to explode, every single one of them. And then you go take a look at Argentina, and Argentina's rallying. Well, Argentina's at breaking out of that base. All right, so why is this happening? Well, then you go take a look at XLF. Well, that's not moving. How about KRE? Well, that's not moving. Okay, so what are we saying? We're seeing some diversification. What kind of diversification are we seeing? If you take VUG and you divide it by VTV, right, you're going to get growth divided by value. Growth divided by value. And then what you're going to do is you're going to drop it in the line chart. Anybody can do this. Drop it into an hourly. And let's get rid of this and look regular here. Now, what you're going to notice since April, you see how we're starting to uptick in here? Okay, so they're starting to look for value names, in my opinion. This is what I'm seeing them doing. They're looking for where can they find value, and they're finding it in different places. And we're going to talk about that in a moment here. But there's certain names that we should talk about that are moving, but you need to understand this concept. And it's going to help you identify which names you should be trading and why. But if you don't understand why this stuff is moving, which was all the macro stuff, right? We talk about the Stool all the time, then you're not going to understand the next part of this, which is going to be, now that you know this, what do you do with it? And we're going to walk through that. But before we do that, we do need to talk about smart money, dumb money, and what's happening. Now, in front of us is smart money, dumb money. And for those that have not seen this in the past, it's definitely something that we want to focus on. It's certainly something that we pay attention to. So let's get to it here. And let's understand that smart money is not how we refer to this. This is not smart to us, that we refer to this as institutional. So again, this is institutional, and dumb is considered retail. If you think about it from that perspective, it'll change what you're looking at. It'll make more sense. And saying everything an institution does is smart and everything retail does is stupid is just stupid to think that way, for lack of a better term. So we don't think that way. We think of it as institutions and retail, and this is because we know how this is calculated. When you know how something is calculated, you can start figuring out how to use it to your advantage. What you're going to do is you're going to notice something. Whenever retail style of investments and then roll, okay, so this is your extreme levels, and you're still in between these two. They're still moving in tandem. When you get to extreme levels, the peak, people say, oh, the peak, you have to short the peak. You don't know that. You could peak, and then you don't know if it's going to be over or not. So what you have to do is you have to look at the data for other signs. You're looking for the peak and then for the wane, and then to see what happens from there. So what I would suggest that you do when you look at something like this is going, okay, well, we peaked right here. It rolled when we rolled. And then you'd come and look at it again and go, oh, well, that's when the real roll happened. So it's not just that you're peaking, it's the break of the line. So once you have that demarcation line here, and that demarcation line breaks, let's change this color, and then I can actually show it. So you can see the demarcation line just a little clearer. And that is just your extreme reading level. So once you're there and you see that, then that's definitely something you could focus on. But you peak and then you break. And what's starting to happen here is you're starting to see some signs of the rally, and then we're testing the level right here, and now we're starting to roll. And institutions are just going sideways. I mean, that's all we're really seeing here. They're just sideways action. And we're not really doing much in here except staying in tandem. Now, if you look at this over different time frames, which I think is pretty pertinent, obviously you can get a different view. But one of the things that you're seeing, which I'm not really crazy about, is this high, and then we're having the lower lows. But you see this rounding that's going on right there? I'm not really crazy about that. You really don't want to see that. You don't really want to see something like this just pointing down when it should be pointing up, right? We just really don't want that. This should not be pointing down while this is pointing up, right? If you look at how this works, it works both ways. See how this is pointing up and then we're going up. Then when we kind of peaked, this kind of leveled off a little bit, right? Now you had institutions that bought during that period of time, so it kind of ate it up. We don't really have that here, do we? So as we're rolling down, what do we have here? We have a straight line. So the chances of this staying up, unless institutions start coming to the plate, is probably not ideal. Now, here they didn't come to the plate. They kind of went sideways. And then when they finally started biting, you can start seeing the turn. And by the time they started biting, who else came in? Retail. And then they lifted. All right, so you get it. But this is definitely something that we're going to have to monitor. We just look at different time frames. That was a year. This is just year to date. And I think this spells it out clearer than anything else because you're seeing it. You're seeing it as close as you possibly can. I mean, here's that period of time from March on. All you did was go sideways. If you really come here and you look at that level, that's all you've done here, right? You really haven't gone any higher. Come all the way back, you're at the same level all the way from January. So it's not like we're really going any. Now, if you were to look at it from a different perspective, you could even make the argument, not only are you going sideways, but you've peaked February 9th, and since then you've been dropping. So this is dropping, and in tandem, you could argue that this is dropping, which it is. So there's something to it, and it's somewhat troublesome. And that's year to date, because if nobody's buying smart money, dumb money, retail institutions, and you're in a corporate blackout, which I'm not going to bore you with, we went over that on Saturday, I'll link that at the end, and you just look at the past 6 months, well, this 6 months made perfect sense, right? You can see why we would look at this kind of level and why that would make a lot of sense to us. And then you would look at this and say, well, that makes sense too, because we're rolling. So does it really make sense? Because you shouldn't be doing this. You should be doing this. And people could say, well, you're already too high and therefore it still counts. It's the trajectory that you're looking at. The difference between these two lines matters, right? There's a whole spread that you can calculate based upon that. But if we have institutions, if you have corporate buybacks, right? And corporate buybacks are frozen, which we know that. We've gone over it in detail. And we know that we're not really going anywhere here. And we know that this one is imploding, meaning they're slowing down. Well, that puts us in a really weird predicament because who's actually going to go out there and buy? Now, I think that's important. And that says, well, what are they buying? Well, they're buying value names, right? And if we take a look at that, what I like to do in these scenarios is I tend to look at things like this, but I also like to look at like all these sectors. And this is where I think that I can add a lot of value because I see people making mistakes. And so I want to point them out. So I think that we can help here. So, and I think because I think they're super simple mistakes. So what you need to do, okay, is here's April. And this is 40 right in front of you are 40 different sectors, and you can see some of them here. If it makes the cut, it'll be in this list. If not, it falls off, right? So you can see from April 1st what's been leading. So what you need to do as an investor is you have to figure out what's moving, not tell the market what's supposed to move and what's going to happen, but you need to look at what's moving. You need to drill into a chart like this. You can do this on TradingView, right? All you do is you pop all the indexes in, and then you save them, right? So after you add all these indexes in, all you're going to do is save. Literally, the save function's right here, and then you save it, and that's the end of it, and then you'll have it. You can put any indexes you want in there, and you can monitor them, and you can monitor them through a 1-minute chart, a 5-minute chart, 15-minute. You want to look at them for the year to date, you can look at them year to date, and just kind of go through it and see where you're at. I tend to do this because it also helps me in doing it, start looking and saying, okay, well, if we start seeing something like way out of line like this, then, and that's up, pot, then we know that something is breaking out and leading. But at the same time, then you have numbers here where you have like the SOX, and the SOX was leading, right? Now, if you take a look here and you go, okay, well, the SOX was leading, and let's take this back. Now, the further back you go, right? The further back you go, the more skewed you're going to get. But if you come back and say, okay, well, just give me that month. And what are you saying? Well, where's the SOX? Well, SOX is all the way down here. But when you looked here, right, and you were going back to, let's go to 24 again, what are you noticing? So this can help you identify what's falling out of favor. Come on, work with me. There it is. So what will happen is this will help you identify what's moving, what's not moving. If you find this helpful, comment. I can do more of this, and I want to show you where we're going to go. I think it's important for you to understand how to sort this, because then you want to look through this and go, okay, am I too late? Am I not too late, right? And we're going to talk a little bit about that. But for our purposes, what we want to do is say, okay, once we have ideas, how do we stay in those ideas? And I think this is really important for people, especially if you're like, I'm missing the boat. If you think you're missing the boat, the chances are that you're probably not. But I'm going to give you a couple quick tips here. Now, a lot of people will look at something like VLO, for example, and they'll see this chart and they're going, oh, I've missed the boat. And for all intents and purposes, you missed the flip, right? The upper channel flip. You missed that. We've been going over these names ad nauseum for weeks and talking about them, but let's just say you missed it for whatever. So now you're looking at this and going, okay, well, I missed it. How do I stay in something like this? So one of the things that TradingView can do is you have VWAP. Okay, so I have VWAP down here, and I use this toolbar. I'll show you how to get on this toolbar as well. But what you want to do with this toolbar, I use Anchored VWAP. Now, Anchored VWAP is a very simple tool. Anchored VWAP will show you the average weighted price throughout the day or wherever you set it. And this is really important because I'm going to show you in another name in a moment. But to get it on TradingView, all you need to do is go over here to projection. And then from here, it'll say Anchored VWAP, volume based. See how it's starred? Now, if you look down here, watch this. People are always like, how do you get things on this list? So how do you get things on this little toolbar? See the star? If I take that star off, see how it went away? If I put that back, it'll appear, all right? And that's important. You can actually move these all around as well, not that you really need to. But I think that the toolbar makes it like it's a quick key and it makes life a little easier. But that said, now that you have Anchored VWAP, the question is, what do you do with Anchored VWAP? Well, from my perspective, looking at Anchored VWAP, the easiest thing for you to do is this. You start by putting it on the day, right? And as long as you're above it on the day from where you entered, you're fine with the trade. If you start cracking it, that's a little bit where you're going to want to be concerned. Like if you start cracking at the end of the day, that's where you're going to want to be concerned. Now, if there were other markers on that Anchored VWAP, then you're going to want to stay away, right? So, and let me show you what I mean by that. So if here's Micron, for example, okay? Now, if we look at Micron and what we would do, let's go back to this. And if we look at Micron over this period of time, we're going to note that you have several spots with Micron that you could mark with an Anchored VWAP, right? Now, I don't want that there. Then you're going to put the Anchored VWAP right here, all right? And what this is going to tell you is it's going to tell you the volume weight of everything that you've been dealing with, right? Since earnings. So now you can see the volume weight of where everybody's in. So when you're down here and you're like, oh, I should have bought it there. Well, once you flip the Anchored VWAP of everyone that owned it since earnings, you lift it. And then what you do is you would come here and then you would just start marking the peak Now you don't know that that peak's there, right? So you want, when you use VWAP, whether it's on TradingView, wherever it is, please listen to this. Don't put them everywhere. Put them on very specific spots where an event happened. Here's an earnings event. Here's a peak on the stock. You don't know that this peak is here. So you would drop it on that peak, okay? Once you're on that peak, you can see how you rejected. But once you flip this peak, you could say, oh, I'm okay, I want to be in the trade. You close below it, guess what you want? You don't want to be in the trade anymore, right? Why? Because the average person is betting against you. If you think about it that way, you'll be just fine. Now, if we go here and we put it in, what are you going to notice? This was the previous peak. What happened when we got to it? We rejected, okay? So if you're here and it pops and you're like, I missed it, if you're checking these levels like this, that is going to save you an inordinate amount of time. And whether or not you're going to chase or FOMO your way into this, right? Then you get the next peak and you do it again. Wash, rinse, repeat. And you're going to see something. Oh, it's running into the end of the day. Is it? Should I buy it here? And then it breaks. These are the simplest lines to work through. So like we had a day trade on this, and I'm going to show you a couple things in a moment on how the market's changing a little bit here. But look at this battleground here. Now, if I take this and you want to see like, oh, this doesn't work, and then we're going to drop it to a 1 minute. Now, let me just show you this. Here's your peak. I'll blow this up. Here's your peak. You go over, you just happen to stop there and then rally, and that's when you explode to the upside. That holding there is literally the single largest move in the shortest period of time of the day, between 123 and 127. Okay, why? Because I'm not the only one that's looking at stuff like this. So now that you have that line, we know that that line is nowhere near as relevant, right? See how the line moves, the relevancy moves, what would become the new line, this peak, okay? What happened at the end of the day? And you can say it from the end of the day. Well, why wouldn't you use this? You could absolutely use this on the day. I'm not telling you not to use VWAP on the day. Right? You could use that. You get yourself an old-fashioned VWAP pinch. And that's what they call these when they're in between them. And again, you can do this with TradingView. It's right here under projection. And then you can, of course, put it there just by starring it. But by using these tools, you cannot FOMO all over yourself. And you can have a true demarcation line to what's going on in the market and actually see where the players are. Because if you're betting against everybody, especially in a market like we are now, you want to know who you're betting against. Now, let me show you what else you need to be focused on. Now, Gretzky has a great saying, focus on where the puck is going, not where the puck is. What I see happen a lot, especially with newer traders. Newer traders to me is anyone that's been trading less than 5 years. And there's a whole litany of reasons for that. But it usually takes at least 5 years to realize what you don't know. Frankly, it's even harder, I think, right now, despite all the information you have, because you went through zero interest rates, and then you went through $1.7 trillion, which made everybody think they were smart during the pandemic. But this is what transpired today. And I just want to show you something. If I go through the trades and I look at my trades on the day, and this is an account that I have linked. I'll go through the TradeZella again. I did some of it yesterday, but I just want to show this because I think this is pertinent. So this is the Alpha Chasers account. I linked this to the ideas that I present in the room, and this account was up 9 today. Now, let's go through what actually is going on here. So here's ASML, all right, and this is something that I'm interested in, and look at what I made. All right, and then this was this merger deal, and I wound up not making any money on that merger deal. And this is a really important concept, so please get this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 ideas. 1, 2, 3, 4. Okay, 4 are down. Okay, so 1 is the CHK. 2 is a Disney short. I was up and then it just moved. Doesn't matter. I closed it. And then MPC, because I didn't like the way that it moved, I held a little bit and then I just got out of it at the wrong time. And then you get into Micron as well. And then look at the goal on NVIDIA. So despite these moving the way that I wanted them to move, I got caught at the end of the day a little bit in this drop. But look at what stayed and look at what went. And what I want people to get from this is the following. If I'm out there trading the same things over and over again, NVIDIA, Micron, look at my day, right? And people are like, well, how does that happen when it's up 4? It can happen, right? You can put a trade on, the trade can go against you, especially if you're pressing bets into the close and then news hits, right? And then what you do is just, I'll go through money management strategies later. But the purpose that I'm getting at is this. At the end of the day, where did the money come from? Where did the money come from today? You go through these lists and you'll say it. Okay, Dell, right. Okay, so newer names again. Where else? Gush, uranium. Okay. This is where the money is coming from right now, right? So that's what we have to focus on. We have to focus on where is the money actually coming from. And again, this is I have positions in VLO and some of these other names in other accounts, but this is more of an aggressive day trading account that I have linked. to the room. And I think it's really important for people to get this. If you keep trading the same names the same way, when the market environment shifts, you're going to have a problem. And you're going to think that you need to change your strategy. And it's not that you need to change your strategy, you need to change the sectors. So this is why you need some of the things that we just went over. This is why it's so important for people to actually pay attention to the stool. Now, I know a lot of people look at this and go, oh, he's going to bring this out again, but you need to understand why you care about how we started this entire conversation, why you need to look at macro, why you need to look at fundamentals, why you need to look at technical. You're looking at the market right now, and you're looking at one side of this because you think you're supposed to just stay focused on one side, not understanding that the geopolitical landscape's changed, not understanding that what we're thinking is supposed to happen with interest rate changed because you're not adapting. Right? There's a reason why only 4% of traders are successful, despite what you see on FinTwit from Freddie Fingers and everybody else, right? So when you look at this stuff, you need to put the work in. Now, how do you do that? I'm giving you some of the tools that people that actually trade money for a living use, right? When you start looking at these things and you go through them and you just do the simplest of things, let's go back and take a look at March, right? And just look at this for a second. And I know this video went over tonight, but the more I see this, the more I'm getting frustrated. And just seeing the comments where people are just looking at the same names over and over again. And what's up here since March? Energy, uranium, gold. People are still talking to me and asking me questions about snow, right? People are still looking at the NASDAQ, right? All of these are 3-to-1, 4-to-1 since March over the stocks. All of them. And you could see this coming. You could see some of this coming. And people will be like, well, how would you see that? If you could look at the economic data and analyze it, with just basically you'd get it. And you'd be able to see this. Now, what people will start to realize, and they're going to start to realize it, and now this goes back to how do you know if you're too late or not? That's why I did the other part of the video. Hopefully you got that. But now am I too late or not? I don't know if you're too late. I don't have an answer for that. But I do know right now that uranium, gold, energy names are outperforming the SOX, the Qs, and the SPYs. They're outperforming software by a wide margin. And you can either be a party to that and understand why it's happening, or you could sit there and keep trading the same names over and over again and think it's your strategy. You need different strategies if you're going to trade the same names. If you're going to trade different names, you use the same strategies. I hope that helps. That's it.